Good evening, everybody. Welcome in, welcome in. We got a we got a bootleg, not Mike. I don't buy it. I don't buy it. How's everybody doing tonight? Yeah, pretty sick one there, huh? Let's take a look at some other things while we're waiting. Also doing well, Tariq. Do I know if we've done a class on trends? Yeah, we've certainly done multiple classes on trends before. There's no doubt about that. As always, though, I want to try and present this one in a little bit of a different way. Yeah, try and emphasize some different concepts that maybe are a little bit less intuitive, a little bit less covered um, in other resources. So we'll see how it goes. I'm super bummed I missed this move on Microsoft. Really had to be swinging long yesterday, though. So that's my bad. I have been a little bit MIA for the last week. Some of you may have noticed, some of you may have not. Tonight is actually hopefully going to be the night that I catch up on things. At least that's my plan, catch up on messages, catch up on charts. I have been away. I finally took a little bit of a vacation, did some snowboarding last weekend. So that was nice, but ready to get back into the groove for sure. So yeah, hopefully tonight is the night that I catch up on DMs and catch up on charts. Where do I snowboard at? I was in Mammoth in I guess you could call it Northern California, if you're familiar. Yeah, it was a good time, man. It was a good time. You want to go out to Colorado? Yeah. I think they're getting more snow at this point in the season than Mammoth is, but it was still fun. It was a good time, man. Good to have a little bit of time off. Important to celebrate yourself every once in a while. I'd like to think a good chunk of us had a real good 2023, and it's important to reward yourself a little, take some time to evaluate, and really make sure you're locked in for the next year. So yeah, I feel pretty good. Um, yeah, I got a lot going on in my personal life. Some of you know that outside of trading, outside of OT, I also work as an engineer. So, um, yeah, beginning of the year hasn't been super slow, I'll say, with the rest of things outside of trading. So that's made things a little bit more interesting, but all part of the fun. I'm trying to manage it, and being here is always the best part of my week. So I think it's going to make me feel better. What type of engineering? It's essentially it's industrial automation. It's controls engineering is the field. That's my title. But to summarize it in two words, it's industrial automation. Best way to put it. But that's enough about me. It's a couple minutes after the hour. I'm going to send one more message and let everybody know that we are getting stuff done. Oh, you did chemical engineering. That was my major in school as well. But I ended up in the controls field. Some of you also might know or notice that I am not at my normal setup. I am only on my laptop tonight, so I apologize if things look a little bit different. But I promise it's going to be the exact same quality as usual. Oh, this is a good question. Morning, Helmy. This is a good question. What do you have advice for someone that's just struggling right now? Don't want to quit, just a little discouraged. I'll actually start off tonight with a little bit of a story that some of you may know, some of you may not know about me, and hopefully this will help everybody feel or think a little bit differently about trading in general. So, for those of you who don't know, I first started trading actually in only options trades. It was really the first place I was actively trading options. I had, took a look at shares and followed markets very loosely in prior years. But when I first really started trading was actually in this Discord server. And I started just like a member, just like the rest of you. I really didn't know anything. I first started with $2,000. I ended up losing that amount of money within the first month or two that I started here. I was YOLOing my port. I wasn't even really trading. I was taking every alert possible and kind of just holding and hoping that every alert would work and just kind of seeing what would happen. I got to the point December of 2022. I had canceled my membership here and was pretty much ready to quit trading, entirely ready to quit. That was the end of it for me. That same month, I attended the first lecture I had ever really attended, first live lecture. And that's really where it all changed for me. I realized that there was so much more that I needed to learn. And myself being kind of a student at heart my whole life, I realized that I had jumped into this thinking that I was just going to be able to know it all instantly, thinking that I was going to be able to do everything just fine, that it was going to be easy. And I learned very quickly that that was not going to be the case. And attending lectures really was the first thing that grounded me and made me realize that there's so much to learn in financial markets. And that really was the turning point in my entire trading career. Now, that said, I wasn't, massively profitable after the first lecture I went to. There's absolutely no if, ands, or buts about that. However, in the coming months, coming years, I was able to finally get myself into a position where I was consistently profitable, where I was consistently making money and consistently behaving in a disciplined manner in financial markets. So just to summarize, that's a little bit of a story about myself. I'm sure it resonates with many of you in here. Maybe some of you are at different stages of that same cycle that I went through myself. A couple pieces of advice for all of you in here. I think number one, being in lecture is the most important thing that worked for me, is just realizing there's so much to learn, being an active participant in my learning, in my own development. So that's going to lecture, that's taking notes, that's reviewing notes, that's watching other YouTube videos online. Paying more attention to things that I'm interested in, asking other people questions, and really taking in and internalizing the fact that you don't know it all and you never will. And you're never going to be the best trader and you're never going to have the most money. And as a result, you have to continue to work hard. You have to continue to dedicate yourself to this craft and this art, because truly it is an art. It's not a science. And there's so many different ways to trade and so many different ways to view financial markets. And you really have to dedicate yourself to it. And you have to put in the time, you have to put in the hours, because it's just like anything else. It's just like any other profession. People think trading's easy because it's very simple to get into. However, just because it's easy for me to download Robinhood, put money in and start trading, that doesn't mean that it's easy, right? It's also easy for me to go to McDonald's and turn in a job application, but it doesn't mean it's going to be easy to manage the whole restaurant, right? So you have to put in the time, you have to put in the effort, because it's not just going to come magically to you, right? Most people are not born good traders. And generally speaking, humans are very bad traders, right? Humans are very bad emotionally in general. And that's really the biggest pitfall when it comes to trading. So that was a really long-winded answer to maybe a question that deserved a shorter answer. But that said, that's really what got me to where I am. And that's just some general advice that I could share with you in specific and everybody. We have a great team here. Obviously, I'm biased here. I love Only Options. I love the group, and the staff team that we have here is the best we've ever had in its entire life. And I can say that with 100% confidence. Our team is literally as good as it's ever been. Are we the best in the whole world? No, absolutely not. There's traders better than us. But that said, we care a whole lot. We dedicate as much time as you all do, hopefully even more. So yeah, I think you're in the right place. If you have doubts, if you have questions, if you have comments in the future, you guys know where to find me. You guys know where to find the rest of our team. I definitely have been slacking on my DMs, as you can see, but that's generally not how I behave. So I need to get back to it. And yeah, so feel free to reach out to myself, to the rest of our team, and we're all here to help. Yeah, I don't think there's any traders better than Flips either. No, I think Tilio's better than Flips. I'm not gonna lie. Flips is great, but Tilio is always number one. And I think Flips would agree there. Tilio is he's a legend for sure. But that said, I mean, everybody's great, right? Everybody's great in here, in their own ways. So that's my little motivational speech slash answer to your question to start this lecture off. It's a couple minutes after the hour. I know we're here to talk about trends, but if you guys have any more questions or want me to elaborate later in the lecture, feel free to let me know and I'd be happy to do so. So that said, I want to get started with the content for the evening. Why am I getting a phone call? Who's this? I can't answer that right now. So getting into the content for the evening. Tonight we're going to talk about trends. And somebody asked, "Hey, have we done a lecture on trends before?" We've certainly done multiple lectures on trends before, and I want to spend this time to talk a little bit about trends in different ways than we have before. And I'm going to cover some of the basics very briefly before we move into the live charts that you're looking at now. Does anybody have any questions, comments, concerns before we get going, or are we all feeling good for the evening? Nobody's better than Mike. A couple people are. I can name a few. I can name a few people. Um, all right. Well, I'll take everybody's silence as everybody's saying they're ready to go. So let's start with just a little bit of PowerPoint here, just a little bit. So this is from my lecture on patterns. I want to just spend a little bit of time talking about the basics of trends and trend lines, and then we'll move on from there. So two types of trends in the market. Again, some of you might have seen these slides before, some of you may have not, but I want to just go through them real quick. Two types of trends. We have an uptrend and a downtrend. Uptrend, what you need to know, it consists of higher highs and higher lows. What do I mean by that? Here you can see some examples of higher highs. Essentially, it is where price tops out and the location that it tops out in was higher than the previous place it has topped. So let's say, for example, this first red circle here is our initial high. Every red circle following that or that occurred subsequently from this first one is a higher pivot point than the prior one. So, for example, this first higher high occurred around 350 stock price. This one was around 360. This one was around 380. This one 395. This one 420. This one 440 and 445. And you can see very clearly that even if you squint a little bit, you can very clearly see the direction that price is moving. But this is a little bit more of a technical way of defining an uptrend. So first part of the uptrend is having these higher highs. Next is having corresponding higher lows. And you'll see if we start from this initial pivot low here, right around the 320 area, we have a small higher low right around 325, then some more major higher lows around 360, 370, 400, 410, et cetera, et cetera. So this is really the kind of most foundational piece of an uptrend, right? Very simple, right? All it is just looking at price. And a downtrend, or excuse me, I didn't realize that we're not talking about downtrends yet. You could also draw a trend line, right? Which also helps to define trend. And I don't want to spend too much time on this right now. I think River has been covering trends like literally every day in his tab, and we can kind of go through what that looks like. But you can also draw this uptrend, which would act generally as a support level. And same idea for a downtrend, except it is the exact opposite. So a downtrend will consist of lower highs and lower lows. So here, if we start with this initial high here as a reference, you can see very clearly that ever since we set this first high, every subsequent high was lower than the previous one, indicating that price is in a downtrend. And same idea with the lows, right? We set this initial low here, and every single low subsequent to that is below this one. So that's just a really brief kind of thing about trends there. And just a little bit of the basics. I know I really blasted through that in half a second. But I want to actually focus more on the structure of a trend and what a trend looks like and why trends on different timeframes matter and how to actually incorporate that into real trade ideas. Before I move on, does anybody have any questions on what I've talked about so far? We have one from Helmy. Do we make the trend line from the wick or body? This is a question that I get a lot. Me personally, I'm generally making my trend lines and support levels from wicks because that generally tends to be the more significant pivot point for me. And you can kind of see, for example, how that's looking here on Microsoft, just for an example. Sorry, I'm on my laptop, so moving things around and like resizing windows is much slower than I normally am, so I apologize for that. But you can kind of see here, oh, this trend line is actually kind of bad. Hang on. I think I actually first drew this trend on my phone and clearly haven't adjusted it. But this is how I would draw this trend here. Well, it's frozen for some reason right now, but that's the big idea, right? So starting from this swing high here and driving it down to this group of lower highs here. But this is a little bit of a different type of trend. This is more of a, I guess, trend that's as part of a pattern rather than just a plain uptrend or downtrend. So that said, let's talk a little bit about the structure of a trend on a little bit more of an advanced perspective. And actually, I think I want to go review something else really quick. So for those of you that have been kind of paying attention a little bit. I posted this review a couple weeks ago or a couple days ago of a bunch of different trends on the higher time frame and a bunch of different charts on the monthly. And I want to just take a look at a couple of them as the examples are very evident as to why I feel some of the ways that I do. First and foremost, let's take a look. Let's take a look at something. Yeah, this one's pretty good. So, looking at this XLF chart, right? Just want to use this as an example here. This is a pretty good one. So, based on looking at the trend, right? Paying attention to higher lows, lower highs, pivot lows, etc. We have our initial swing low down here and our swing high here. And I'm actually going to even just hold this chart up at this point real quick, just because I think it'll be a bit easier because I can highlight things. So let's go to the monthly and let's take a look at this. All right, there we go, much better. So let's save this really quick. And zoom in a bit. All right, so taking a look at the trend here on the monthly time frame, very obvious we have two initial pivot points here, which is this swing high here and this swing low here. And you might be wondering, what am I referring to when I say pivot points? Essentially, when I say a pivot point, I'm referring to a place where price reversed, right? Very simply put. So here you can see at this green oval, price reversed, right? It had 3 red months once it came to this area, right? And same thing here, price came down to this oval here and very quickly reversed. We put in a nice long downside tail here, a couple green bars up, and ultimately larger reversal up. So this is our pivot high, which I'm going to label here, pivot high. And our pivot low, right? So when we're analyzing trends, a couple ways to do it. Again, you could draw a trend line, right? So maybe you draw a trend line up, something like that. Or you could look at it based on swing highs and swing lows. And to pay attention and understand a trend based on swing highs and swing lows, you have to have a reference point for both. So this pivot high and pivot low that I've drawn here are our initial reference points, if you will, right? And just to kind of a brief aside, this specific thought process and line of thinking that I'm currently outlining isn't something that I do so consciously. And once you get so much more practice, kind of analyzing trends and really looking at these things in depth, you're not going to be going back and saying, okay, this is my initial reference point, this is my higher high, this is my higher low, et cetera, right? You're not going to be going through all of that process anymore. The reason I'm doing that is just to be very intentional and speak through my thinking very clearly so that we're all on the same page. So hopefully that explains maybe why some things might sound a little weird or a little different than you would expect. So looking at the monthly time frame here, we have our initial pivot high here, our initial pivot low here. The next pivot high that's very evident to me is right around here, right? Right around here, which we can very easily tell that this pivot high is a higher high, right? You can tell this is a higher high because it's higher than the initial pivot, right? Very simple. So once we see this initial higher high, we should be expecting a higher low to confirm that price is in an uptrend, which here you can see we put in a significant higher low. And you might be wondering, how do you know that this is a higher low? Well, it is significantly above our pivot low, right? So very simple, right? Very simple, very elementary here, right? Starting from the pivot low to the higher low is much further above the pivot low, and the higher high is much further above the pivot high, right? Again, really kind of weird ways to think about it, I guess, and very detailed ways to explain it. This isn't something that you're generally going to be doing this, specific detailed exercise, but I really want to drive the point home on how to understand price structure. So that said, we've established that XLF is in an uptrend on the monthly time frame. Now, let's compare XLF to something else on the market. Maybe we compare it to the SP, right? So let's take a look at the SPY over the same time frame. So we'll go to the 5-year monthly and compare. This chart looks relatively similar, right? So nothing really to compare here, right? You'll notice we set our initial swing high and swing low at the exact same spot. We set a pivot high at a similar point. We set our pivot low, set a couple sequential higher lows, and are trending generally similarly. However, if we compare this XLF to maybe something like IWM, right, you should be able to notice a little bit of a difference here, right? We have our initial swing high, our initial swing low, our initial higher high, and our initial higher low. But one thing to notice here is that XLF is setting these minor higher lows on the monthly, right? These minor higher lows. And you have to remember, price action is a representation of psychology and trading activity in the market. And you'll notice a very interesting discrepancy here, right? As XLF sets higher lows, IWM, which is a generally completely unrelated instrument, right? Just to illustrate an example here, generally completely unrelated, so not necessarily any specific correlation to be drawn here. However, something to note, we have these higher lows here where IWM did not set any higher lows on the monthly, right? They're equal lows here, right? Whereas XLF is setting higher lows here on the monthly. And you guys might be wondering, well, why do we care, right? What's significant about this? What this is saying and what this should say to you is that buyers are becoming very slowly more aggressive, right? They're willing to put in a floor at higher prices. You have to remember, this is one thing. If you learn nothing from this lecture, I want you to learn this. The best traders, the best institutions, the people with the most money are always going to be buying the lows, selling the highs. Very simply put, they have an amount of money that physically can move markets, something that you and I will never have to worry about, unless maybe one of you gets billions under management at some point, which I hope you do. That would be awesome. But I can tell you right now, I don't plan on ever dealing with that. That said, right, institutions are always going to be buying the lows, selling the highs, right? At least the best and biggest, right? Not all, a select few. That said, when price comes to these lows, right, imagine institutions filling their warehouses with shares, right? Imagine it's like a wholesaling company that purchases goods when they are low in price. For example, I give this example a lot. Let's say PS4s go on sale, and all of a sudden they're $200 and they're normally selling for $500, right? If you're looking to buy a lot of PS4s, you'd much rather buy them at 200, right? So the first time these PS4s come down to 200, you're going to buy a whole lot of them, which is this first dip, right? And let's say the price goes up a little, you don't really sell any. All you're doing is you're accumulating a big position of PS4s because for some reason you have a feeling that these PS4s will go up in value in the future, right? You're buying them for 200, hey, I'll probably be able to sell them for 500 in the future for some reason. So we buy those initial PS4s for, let's call this the 200 level, right? Then price on the PS4s drops once again. This time it drops to a little bit of a higher price. And I say, okay, previously I bought them for 200. Now I'm going to buy them for 250, right? So I'm going to spend a little bit more money, but I still know it's a good price. Price goes up a little, price comes back down to now, let's say 300. Again, I revisit this idea and say, okay, the price has fluctuated a little bit, but I still like the price of PS4s here. I'm going to buy a couple more. Now, let's say, for example, I've filled my warehouse with PS4s. I'm ready. I've accumulated my position, and I am the biggest owner of PS4s in the world, right? Or PS5s, whatever the new one is. So I've accumulated my position, and since I have so many PS4s, I have the ability to move markets in some ways. So once institutions fully accumulate those positions, it's very common to see a big move out of this type of consolidation, right? And this is a little bit of a complex idea, but you can see this idea being illustrated here. And hopefully that wasn't too abstract. But that said, right, it's like somebody is buying something repeatedly when price is low. However, that low price is slowly inching higher and higher. So somebody is getting just ever so slightly more and more aggressive on buying whatever this instrument is, right? It could be PS4s, it could be XLF, the ETF that represents financial stocks, right? So that's one way of thinking about things when you're paying attention to trends. Now, we are looking at a monthly chart here, right? One point I want to get across is the larger the time frame, the more significant the trend, right? So we have a monthly uptrend on pretty much everything in the market. on SPY, on the Qs, on IWM, on XLF, on, crypto at this point, probably. A little bit more of a mess, I would say. Not quite a monthly uptrend here. But generally speaking, right, the entire market is in a monthly uptrend. And it pretty much has been forever, right? Always. So that just justifies the point that the market will always eventually go higher. It has been going higher for 100, 200 years, and it will continue to do the same over time. That said, it's important to understand the longer term trends in the market. A trend is like a moving train. It is very difficult to turn a trend around and completely stop it, right? It's very difficult to stop a moving train going 80 miles an hour, right? It takes a lot of energy and effort to do so. And as a result, it's not incredibly common we see trends change once they are established on these higher timeframes, right? This is a very significant trend higher. And as a result, it's going to take a lot in order for this trend to be stopped. Let's zoom in a little bit further, right? And talk a little bit about a trend reversal. So on the weekly here on the SPY, let's zoom in on this section here, right? If we're analyzing trend, this is one of the examples that we've already reviewed. And let me just clean this up once again. This is one of the examples that we looked at very briefly. So here you can see our initial swing high, our initial swing low, right? Notice we have a lower high, lower low, lower high, lower low, lower low, a higher high, which is a little bit weird. That's a little bit of an anomaly, right? And then ultimately a lower low. So what we want to be looking for in a trend reversal is we want to see a higher high and a higher low, right? So we have this established downtrend. We could even draw a downtrend line, right? Let's draw a downtrend line here. All I'm doing is just dragging down from the first swing high down to the second. Oops, couldn't actually see that as good as I'd hope. It's a little bit higher. This green oval is hiding that wick. There we go, a little bit better. So a couple ways to analyze this trend, right? We have this downtrend line here as resistance, and we also have our price structure, right? We have our initial high and our initial low. Come on, our initial low. We have our first lower high, LH, and lower low, lower low. Once you see the first lower high and lower low, automatically you know the trend is down, no matter what, right? If you look at the SPY previously, there was no indication of a lower high or lower low until this area right here. So this is your sign that a trend reversal has occurred. Once you see a high and low be swept, and we set a lower high and lower low. At this point, the trend is no longer up and it is now down on the weekly time frame, right? And you can see how this trend continued lower. Again, another lower high, another lower low, another lower low. An interesting higher high, right? But ultimately set a lower low. The same idea works in the other direction, right? We set our first lower, higher low. Let's annotate this out here. Higher low. I'm actually going to clean this all up because this is getting a little bit too messy and I don't want to confuse everybody. So we've established this first trend reversal. I want to really focus on this one now. So let's draw this downtrend line. Let's talk a little bit about the psychology of market participants once again. This right here is the first higher low in almost a year and a half. Almost a year and a half. You have to remember that the market is traded and operated in by real people, real humans trading, right? There's algorithms that automate trading activity and they do a lot of the actual execution. However, who writes those algorithms, right? It's people at the end of the day. It's people that react to these charts at the end of the day. And you have to be thinking, what is changing with the personality of this stock when this first higher low is set, right? Obviously, this has been in a downtrend, right? We have very clear lower highs and lower lows for almost more than a year. Once this first higher low is set, alarm bells need to go off in your head. you need to be paying attention, right? Does this mean that the market bottom is in and the trend is reversed? No, right? This is the first higher high. It's also a place to be paying attention to, but it didn't end up holding a higher low, right? So it's not always going to work, right? It's not always going to be the end all be all reversal. However, this is the first higher low set in the market in a year and a half, in a market that's uptrending on the monthly, right? You have to remember that eventually people are going to come in and buy the market once again. So this is our first higher low. Once again, we set another higher low here, and we also set a higher high, right? Notice how from this high to this high, we reach higher prices. From this low to this low, we reach higher prices. So we now, by definition, have an uptrend. Higher high, higher low. This is a massive deal. And this is something that you see time and time and time again in financial markets. You can go back and look at my tab. This is something that can be identified in real time. If you look back at my tab from March 2020 or 2023, this was the most bullish I had been in a year and a half, very publicly too. It was very evident to me at this point that trend was beginning to reverse. And in no way, shape, or form is this supposed to be me tooting my horn saying I was right, look what I did, blah, blah, blah. No. The purpose of this is for me to show you that this is possible to do in real time. This isn't something that can only be done in hindsight, right? You can see these higher lows being set in real time, notice this significant volume coming in on this higher low, and start to make some assumptions based on the probability of what will happen next, right? We're seeing this high volume come in at a higher low, very significant, right? We've had lectures on volume last week. We should know what this means. So that said, this is just kind of a larger outline of how to, I guess, really break down a trend and really granulate it into simply pivot highs, pivot lows. I've talked for 20 minutes straight, and I'm sure that I've confused somebody or said something that didn't make sense. So is there any questions or things that you'd like me to elaborate on right now? Is there anything that I've said that's confusing? Because I'm sure there's something. We have one question. Could this be the same intraday? This concept of understanding trends applies to literally every time frame. Yeah, I can show the pivots. So let's draw them out. Let's draw out these pivot points. This is going to be our low. This is going to be our high. This is our first higher low here. Oops. Didn't mean to do that. Our first high. Our first low. The best part about trends for me is these pivot points in a trend offer such key technical levels. I mean, it's amazing how critical these levels end up being. And the reasoning behind that is because of the psychology behind a trend. The trend in the market matters. And where these highs and lows are set always will end up being massively important technical levels, right? Look at this. This was the first high we set after the significant low in the market. A whole year later, this is now the low, right? I mean, this is a beautiful example, right? Beautiful, beautiful example of how significant these levels in a trend can be, right? And let's go and chart a few more, right? Let's chart a few more. Let's chart a level here and here. This is a higher high. You could kind of call this a higher high as well. So I'm going to draw it as one. Also the point of control. This is a higher high. And this is a higher high. Let's see how price reacted to these levels in trend. There is absolutely no coincidence that once we broke above this previous higher high, we saw more upside momentum every single time. Every single time we break above these prior highs, there's no reason we wouldn't see this momentum higher, right? Because these levels in trend matter. This is what defines the direction of a stock on a larger time frame. If we don't break this previous high, there might not be an uptrend. However, once we break this and set a higher high, not only are we breaking out on a key technical level, but the trend is continuing to confirm that it is higher, which will give market participants the confidence to continue buying. And that's why analyzing a trend is so important, and understanding the direction of the trend on the higher timeframes is so important, because so many people were needlessly bearish here. Why? Why? Right? We're significantly above our previous higher high. And that's what matters more, right? This is the larger trend. This is our prior higher high. We couldn't even come down to retest it, right? And this just shows the strength of buyers in the market, right? These ideas are concepts that are applied day after day on time frame after time frame. Every single day, you see setups like this. Let's look at another one. Let me think of one. Google. Same exact idea here. Let's illustrate this. Trend, very clearly up. Let's look at our points here. We have our initial swing high and low-ish, right? We have a higher low, higher high, higher low. Let's mark out some of these levels here. We have one higher high here at this wick. We have another one here and another one there. 3 levels, 3 higher highs. Are you seeing it? Not only do trends matter to understand the direction of a stock, but paying attention to where the trend has set lower highs and set lower lows, or set higher highs and set higher lows, are arguably the most important levels on any chart. These are some of the strongest levels of support and resistance, because these pivot points from a trend on the higher time frames are where buyers and sellers are most interested in. And the reasoning behind that is simple. It's where they have made the most aggressive swings in price in the past. And the only way to make aggressive moves in price is to make large transactions. And if people are interested in making large transactions at a level one time, you better be damn sure that they would be happy to do it again. Pivot, 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 pivot. Do you think this matters yet? Do you understand how simple it can be to get some of the most important levels possible simply by understanding the trend on the larger time frames? Are you understanding how significant these larger time frame trends are? These are what guide price, right? The trends on the larger time frames are what matter more than anything, right? The trend on the 1 minute, irrelevant. Trend on the 5 minute only matters if you're day trading. Trend on the 15, same. 30, same. Hourly only matters if you're either day trading or swinging, right? However, the most important trends of all are the ones on the higher time frames. If you are looking to go long or short, the higher time frame trend should align. You will always have a higher probability of success when you make that true, when any trade you take. For example, even I fell victim to this recently. Taking a look at NEO. This is something that maybe some of you traded with me. This was one of the first trades I took in the new year. I tried to get long on NEO right around the 8.5 level. Is this in an uptrend on the higher time frames? Is this an uptrend? Can somebody tell me? From what we know now, is this in an uptrend? Yeah, I don't think so. I don't think so either. And I tried to get long on it. It was a horrible trade. It was not a good trade. And you know what? It happens, right? It's okay to make mistakes. But yeah, I tried to catch the breakout. It didn't work. However, right, the trend is not up. So the longer time frame trend is maybe down, maybe flat, right? Maybe one of the two. You could get away with saying it's not in a trend. It's just consolidating. I'd be fine with that because I hadn't set a lower low and it did set this higher high. So pretty much no trend. So automatically it's going to be much more difficult trying to find a direction out of it on the lower time frames, right? It's not in a trend on the higher time frames. So it has much less of an excuse to be in one on the lower time frames. And that was my mistake, right? I ignored the higher time frame trend. I also ignored the fact that it failed to break out above the 200 moving average. I tried to enter on this red day. I ended up cutting, I think, on this one. Life goes on, but lessons to be learned. Some of my most successful trades, even one that I had today, Google. Not only is it in an uptrend, if you compare it to some other things, it's significantly stronger, right? Very clear uptrend, beautiful higher lows, right? Even if you zoom in a little bit, beautiful higher lows here. Boom, boom, boom. So the point here that I'm trying to get across, number one, the highest time frames matter for all types of trades. Automatically, if you are taking a trade on a chart or on a stock or on an equity that is in an uptrend or a downtrend in the higher time frames, and you are trading in that same direction on the lower time frames, you automatically have the wind at your back. The train is moving in your direction, right? If you're looking for a similar setup on the lower time frames, it's in your favor, right? Counter trend trades, also known as trading against the trend, generally have lower probabilities of being successful, generally also can offer higher rewards if you are right. So there's a little bit of a balance there. That said, you have to be paying attention to these higher time frames. And the main reason why I presented this whole PowerPoint of trends on the higher time frames is to get people to be paying attention to these higher time frames and to get people mindful of what's going on the higher time frames, right? There's no reason to be feeling bearish when charts look like this, right? Got a couple questions here. Would I recommend higher time frames for smaller portfolios that trade cheaper stocks? Before you take any trade, I recommend looking at the higher time frames no matter what. The reason behind that is simple, right? It's what you saw earlier. Getting the levels off of the higher time frame trend can make or break a trade. Can you get a link to that PowerPoint? It's right here. So I will give you a link to this PowerPoint right now. There you are. Yeah, iPhone. That's a good question though. Always, when I'm starting my analysis, it starts by analyzing the trend on the higher time frames every single time. That is what is most important to every single one of my trades. And you know what? I'm not perfect, right? Sometimes I try to be blind to it and ignore it and force something like I did on Neo, and it didn't work, right? And that was a bad idea, and it didn't work out for me. And that happens, right? I'm human too, and I make dumb decisions and I have bad ideas. It's the reality of it. I try to make those happen less, but what can you do, right? Don't let it kill you. So that said, right now at this point in the lecture, we should have a little bit more of an understanding of how to find trends, right? On top of that, we should also have a better understanding of how to understand the significance of levels in a trend, right? Some of these pivot points. Oh, yeah, meta. We'll talk about this. Meta is an insane example of a strong trend. If you zoom in on this, this was one of the strongest trends in the entire market for almost one whole year. Almost one whole year. It has not set really a single lower low at all. Not one time. And that type of thing matters so much. And you can see as it continues to push to all-time highs, and it will hit them probably in the next week or two. It will hit them. I mean, it just goes to show, right? Paying attention to the trend on the higher time frame matters, right? You'll notice, let's say, for example, on Meta, right? This one, very difficult to be long at the bottom, right? It's so hard to catch the bottom always, right? Always not going to be an easy feat. But you should start to be thinking something here. This was our previous lower high. You could even call this our previous lower high, right? Significant lower high. Once we start to break above this, you got to be thinking, okay, is this a reversal? When we break above this lower high, you should be thinking, this might not just be a bear flag anymore. This might be a reversal, right? You're seeing two prior lower highs in a downtrend clear, on top of the fact that we're also breaking into a massive gap above, also a massive volume gap, little resistance above, yada, 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 right? You should probably be thinking, I think the trend has changed, right? You can see these two charts, these two parts of the chart are not the same. And I will say that Meta has gone on one of the most insane rallies outside of NVIDIA that the market has seen over the past couple of years. I mean, this thing was down, I mean, what, 60, 70%? Let's see, actually closer to 80, 384 to 70, 88. Let's see. This thing went down 77.2%, maybe a little more, a little less, only to come right back to all-time highs. Insane. Tariq, what if your levels are different than mine? How do you know where the exact highs and lows are? That's an interesting question. Your levels are not going to be the same as everyone else's ever. Plain and simple. There's always going to be different ways that people mark levels, right? And algorithms interpret levels, right? That's the plain and simple, cold, cut and dry truth. That said, the way I like to think of support and resistance in the market is a little bit more of an area of interest rather than a line in the sand. And one thing that Shark, one of our analysts here, told me when he was mentoring me a lot more directly was that support and resistance, sometimes you just have to squint and look at the chart, right? You're not always going to get a bounce off your support level to a T. You're not always going to get a rejection of your resistance level to a T. And that's why trading and charting in general is much more of an art than a science, right? The market's not perfect. It doesn't behave nearly as efficiently as it could. Yeah. So think of support levels as much more of an area of interest. So while I might draw this level here at 184.42, well, maybe you want to draw the level at 181. Oh, that's fine. That's not a bad level either, right? It's simply an area of interest in this case, right? So you don't necessarily You don't necessarily need to have the most precise and accurate level from the higher time frames. However, let's say, for example, I think this 353 level is interesting. What I can do is I can now zoom in on the daily and refine this level a little bit. So I know that this level is interesting on the weekly. So I want it to be even more accurate, which this ended up being pretty good, I would say. I could go in, look at these daily bars and say, okay, this one's at 353.80. This one's at 353.65. This one's at 352.71. So I can maybe take this down to 353.80, something like that, right? And make that a little bit more precise. And generally solid reaction here. We zoom in how we reacted to this level on the hourly and the 30-minute. Pretty obvious that this level mattered. Yeah, Zoom user, that's also an interesting question. And that's also something that I want to cover here. And something that's so important about understanding trend is that when you are trading, sometimes structure is slightly more important than price. And what I mean by that is if price is still in an uptrend and your trade is still valid, it should be a little bit harder for you to stop out, right? And ideally, you don't get yourself in a situation where you're trading something where you're looking for further upside. You're in a position where you're below your stop, but the trend is still up, right? If you get yourself in that kind of situation, I would generally argue that you defined your trade in a not good way. That said, it happens. But generally speaking, right, pay attention to the structure first, right? So when you're planning on stopping out or entering or doing anything to manage a trade, analyze the chart, look at the structure, right? So for example, for a trade like Google, right? I don't see really a single good place to go short besides directly at resistance, maybe right here. The structure of price, at least over these last couple of days, is very clearly up, right? High, low, higher, higher, low, another higher high today, right? Our higher low is above significant resistance from prior days past, right? So generally speaking, the number one thing is to ideally define your trades in ways where you will still be in them if the trend is still in your direction. The next thing to be mindful of is waiting for candle closes and waiting for a candle close that is meaningful for the type of trade that you're in. And what I mean by that is if you are in a swing trade with 10 months of time, you would be delusional to stop out on a price action close on the 1 minute below your level. You would be borderline, I don't know. I don't know. Right. If you got a weekly candle close below a key level when you have 10 months on a contract, that might be a little more significant. So you have to trade your time frame as well. So if you're trying to trade a weekly setup, a weekly setup, number one, you shouldn't be trading weekly contracts because this right here is 3 weeks of price action. 1, 2, 3 to break and retest a level. So you have to remember, know your time frame and trade based on it. So that's the first thing to be mindful of. So, you know, when you're trading based on your time frame, it's going to force you to buy time for that setup. So again, right, if you're day trading, right, you probably don't need a contract with 10 months of time. But as a result, let's say you're day trading and your flips and you hit some, I don't know, QQQ calls today, right? Flips is a little bit of a quicker trader, especially off the open. However, if I'm flips and I'm trading maybe a break above pre-market high today on the Qs, which maybe he did trade, maybe he didn't, right? So we get this break above. Notice how we get this little barely close above, below, I should say, right? Barely close below it. It's a little bit iffy, right? There's a chance you could stop out there, right? Especially on this volume. And honestly, with this example, I really wouldn't blame you for stopping out on this one. This is actually an example. I'm not gonna lie. I can't act like, yeah, I really wouldn't blame somebody for stopping out here. High sell volume, candle close back below pre-market high. I can't blame you for that. So that is an example of a stop out that might not be unreasonable. However, no, Norbin, no SMCI or MDB. We're busy. We're talking about other stocks today. Look at the S&P. I want to try and find a nice example of this. Okay, this is one good example. So here's our pre-market high on the SPY, right? Approximately. I'm kind of ignoring that last after hours bar. We can move it higher if we want, but it doesn't really matter. This is an example of somewhere where you wouldn't want to be getting long above because there's no candle close above pre-market high, right? You might get faked out on an entry here. You might get faked out on an entry here as well. But price not only isn't closing above pre-market high, but it's also not closing above this previous higher high. So the trend isn't confirming higher yet. So as a result, you'll either want to wait for that higher high to be created or get this closed above pre-market high or enter on some kind of higher low, right? A couple ways to think about it. So here we go. This is kind of nice. A couple higher lows in this level. Not bad. Does that help a little though, Zoom user? Number one is looking for candle closes. Number two is trading your time frame. So you have no reason to stop out on 2-year contracts based on a 5-minute close, right? Okay. We're getting close to the end of our time for the night. So I want to cover any other questions, concerns, or confusing things that you guys have on your mind before we call it for the evening. And honestly, I can't believe it's already 7. This class went by really quick. How are we all feeling? Are we feeling like, one, even if you don't understand what a trend is after this whole class, do you at least understand the significance of trends and how it's so important? I mean, just the levels that you can gather from analyzing a trend. I mean, I can't imagine how much clearer I could have made it, how significant that is. That's the number one thing, really. And number two, the significance of um, trading the trend, right? And that's a little bit of a cliche statement, so I kind of hate to say that. All right, any thoughts on coin? Let's see. Well, right, if we zoom in here, trend is up, right? That's the first thing to note. Longer time frames, still having a little bit of difficulty. Technically not in an uptrend on the weekly, I guess over the past 3 years. If we look at the daily though, this is 100% in an uptrend. Oop, that's the 1 minute. This is 100% in an uptrend by every definition. This thing's just going to keep getting funky after this Bitcoin ETF. I have no idea what it's going to do. I think we saw a little bit of a sneak peek of how these ETFs are going to react based on what we saw yesterday when we saw that fake news come out of the SEC where this guy got approved. And you could see we kind of repeated that exact same reaction today. Coin, Mara, all the crypto names, they're just going to be so driven by this Bitcoin ETF approval, all these Bitcoin ETF approvals. So honestly, it's something that I would just rather kind of be a watcher at this point, an observer, just because it's going to be rather interesting. I would think the next couple days to see how it plays out, and I'm almost more interested to see, how the new ETFs behave and what gets the most money. Yeah, it makes you wonder if money will come out of those names and go into the ETFs. I think part of it, Mike, is that there might be a lot of cash on the sidelines waiting to go into these Bitcoin names. So I don't know. I'd be interested to see. I don't necessarily disagree. I think the allure of using the crypto miners as kind of a proxy to trade crypto, I would expect that to decrease once you have the spot ETFs. Um, but I have to imagine that there's plenty of cash on the sidelines waiting, money managers waiting to be able to put investors' money into just spot Bitcoin. And people have to be really interested in it too. So I don't know. It's so hard to say. Um, they don't know if we'll get a crazy reaction higher or lower out of the miners as much as we might think at this point. I think we've gotten the higher reaction, obviously, but I can't imagine how much selling we'd see considering how aggressive they've been at just buying this up the way into it. But I mean, who I really don't know for sure, but that'd be my guess is that, maybe there's some selling or some consolidation. But you got to think there's a lot of cash in the sidelines waiting to go into these spot ETFs. All right. Penn says, you said trade your time frame. Can you expand a bit? So you buy a contract based on what time frame you're watching charting, correct? Yes. So, for example, let's say you're day trading with flips today. And you're day trading some QQQ calls based on a 5 minute, flag or breakout, right? If you're trading your time frame, right? You're trading the 5 minute, it's a short time frame. So you can get away with trading weeklies, trading same days, trading next week calls, right? You don't need much time for a 5 minute setup. That's the first note. Number two is cutting, taking profits based on that 5 minute, right? So if you entered based on a 5 minute close above a level, you should probably be stopping out based on a 5 minute close below that level. You probably shouldn't wait for a daily close below the level if you're trading on the 5 minute, because that's not the time frame where your setup was on, right? Plain and simple. And same thing goes for the higher time frames. If you are taking a trade, let's say for example, there's I don't know, a bull flag on the daily chart, right? I hope that's not the only reason you're taking a trade, but let's say it is, right? A bull flag on the daily chart, right? And you get long, right? I would expect you have a reasonable amount of time, right? This is a daily chart. The setup might take a couple days to play out, so you probably shouldn't be in the same days. You probably shouldn't be in weeklies either. Maybe next week's, maybe the week after that, right? So contract time, first thing to be mindful of, that correlates to the time frame that you're looking for the trade on. And then also number two is how you enter and how you stop out, right? Would you stop out based on a daily close back below the flag, or a daily close below your stop loss, or a 5 minute close below your stop loss? Well, if you're trading a daily chart, you probably shouldn't be stopping out based on the 5 minute, and you probably shouldn't really care what the 5 minute is doing, right? The setup that you're trading is on the daily. So what does it matter what the 5 minute is doing? Does that answer your question, Pen? Oh my God, Norvin. Norvin, MDB, I don't really like it. I don't know. It looks fine. Doesn't, I mean, I can't say this is really generally a place that I would be entering long. I'm sure this is sitting right at resistance too. Yeah. So not generally a place that I'd be taking it long. I mean, is the trend up? Yeah. Is it generally not look bearish? Yeah. I mean, it doesn't necessarily look bearish. I'll give that to you. And it looks solid on the weekly, but I don't really think I'd trade it here, but I don't necessarily have anything against you for trading it here. I think it's fine. It's fine to be long here. I don't think I really would, but it's not the worst thing, I guess, you could be trading right now. But yeah, I don't think I can give you my blessing really, but I don't hate it, I guess. AMD, yeah. Honestly, I was pretty wrong on AMD, and I think River and I both. I think it might have been Josh actually that asked if he should get AMD calls. I think it was on this day here, and both me and River were like, I don't really like him here, and that was the dead bottom. So Josh, if you're in here, man, I I'm sorry, man. I am very impressed that this ended up being the bottom, but it definitely wasn't looking great down here. And ended up setting a higher low and bottomed out right there. Yeah, I mean, I think it was Josh that was like, "Hey, should I hit these calls here?" And I was like, I personally wouldn't. But it was the bottom. But I don't know what to say. I mean, I don't think that this is something that I'd repeatedly buy, but this time it worked, and sometimes that happens. That said, AMD here looks a little like I would rather wait for this 150 to break. It's really having trouble with the 150 spot. I'm not super interested until it comes back there and can get through there, or we see a nice constructive hold of the 9 here. I'd be happy to get involved there, really the 143.50 spot. Yeah, you can clearly see the trend is up. Certainly see the trend is up. And yeah, somebody said a double top on AMD, certainly possible. The only reason that I'm not as concerned about that is because, right, you got the double top here. However, you don't have any unusual increase in volume at the double top, right? And usually for a double top, you'd want to see an increase of selling volume here. Could this be a double top without it? 100%. But does it look super scary to me right now? Not really. But also I said that it didn't look great long here, and I was dead wrong. So maybe AMD evades me again. But Flips did say that AMD is a $150 stock, and so far it has not been able to break 150. So I don't know. I think maybe Flips made the call on AMD and said it's 150, and I don't know if it'll be able to get above it. All right. My pleasure, Cecilio. Thanks for coming in. All right, we'll look at one last stock, Nvidia. I mean, Nvidia is in a hell yeah pen. Let's go. Happy to hear that. All right. Yeah, I mean, Nvidia is in a complete uptrend. I mean, I I am very disappointed that I didn't slap it long above 500. I was long this week and I made like 15% on it because I thought it was going to break 500 here. And I made literally like a couple $100 on it, and thankfully got out of it before this dump. And then I haven't touched it for the real move. So got a little bit of FOMO on this one. I can't lie. Um, Definitely a bummer that I'm not long right now. But it is what it is. Yeah, I mean, here's my targets: 570, 600 is what I'm looking for above. You already got them on the chart. That's what I'd expect to see. 570. I mean, I think this week's slightly too aggressive to see 570, but I wouldn't be surprised to see it before the end of the month, 570, and in a couple months, 600. And I also wouldn't be surprised to see this one split again in the next couple, maybe this year. I would not be surprised to see Nvidia split, but we'll see. But yeah, this is right around the same price it split last time. Let's see. Let's see, yeah, it was like before the last split, it was about 1,000. Well, I guess before the split was announced was right around here. So it's getting close to where it split, that split price again. Um, so yeah, I really wouldn't be surprised to see that type of announcement this year at this point. If split usually it rips, yeah, it's very common to see a significant move higher before the stock split. So following the announcement into the stock split, it's very common to see a significant move higher, and we've seen it both in Nvidia this year, Amazon, yeah, Amazon a couple years ago, Google, I believe as well, split kind of at the lows there, but there was a small move higher. Tesla, obviously, I think everybody knows both splits were significant for stock price. If we look um, back into 2020, that split was massive. Even this 3-to-1 was decently significant as well. And you have to remember that this is the day that was announced. This is the day that it came into effect. So it likely was announced back at this area. Price moved higher into it. Yeah, splits are big deals. This is speculation though. But do I think the stock's going to split? Yeah. Do I know? Absolutely not. Um, wish that guy would shut up about SMCI. No, we all love Norvin. Don't be mean to Norvin. He's fun. Cool. I hate that Norvin mentions all these terrible stocks sometimes, but I gotta hand it to the guy. He is rather entertaining. And he is a pleasure to have. Yeah, I mentioned coins in an uptrend. Can I share support and resistance levels? Yeah, so I think I got a couple levels here. This is what I got. So this is from the higher time frames, but this is what I'm paying attention to. I'm not really trading coin at all. Honestly, those of you that know, you can take a screenshot of this. I'll give you a couple seconds. These are my levels. These are from the larger time frames. I'd also have a level at this point right here, 187.39-ish. And let's see how that looks. Okay, so not significant. Yeah, coin certainly an uptrend on the daily, but yeah, those of you that were following the tab a couple months ago know we took Mara calls like literally here. I took them at like 980 and sold them at 11 and missed the entire move higher, which is so sad. So unfortunate. Oh my God, it's one of my larger regrets. It's so unfortunate. it's so hard to hold. I mean, yeah, there's no way I would have held, but yeah, I mean, I put on a pretty good position. I had like 70 of those contracts too, and I made a couple thousand on it, and I was like, all right, like, um, I was like, awesome, like that was a great trade. And a couple days later, those contracts are doing, 1,000%. It's like, oh my God, hate myself. But yeah, I mean, I wouldn't have held the full position the whole time. I probably would have been all out, if I wasn't all out on that day, it would have came a lot sooner. So, or a little bit soon after that, you can never guess that this type of move is going to happen. I mean, I would have never thought. Even Grizzlies, I was talking to him when I was taking those calls. He was like, "Yeah, Mara 14," and I was like, "All right, bet. Like, you're kind of nuts, probably, but we'll go with it." Yeah, Mara 14 ended up being support. It gapped right over it. So, you can't beat yourself up over it. It's a fun story. What can you do? It's happened before. It's happened again. You know, all part of the fun. All right, everybody. Well, I think I'm going to call it here for the evening. As always, I appreciate you guys all being here with me. Yeah, I've been on a super irregular schedule right now in 2024 on the server. So it's unfortunately probably going to continue a little bit. I got some traveling to do for work and some other random stuff I got coming up. So I'm going to do my best to dedicate as much time as possible to you all because you deserve it. And honestly, so do I. This is definitely my favorite thing to do, I would say. So yeah, thanks again everybody so much for being here. As I always mention, these lectures are literally nothing without all you guys being here. It would be terrible for me to sit here and talk to myself for an hour. So yeah, thanks again so much for being here. And yeah, Norvin, I am actually in San Diego right now, but I don't live here full time. I live in Orange County right now in California. So I didn't know you were in San Diego though, Norman. I'd be down to see you. That'd be pretty funny. Yeah, I'd be down to go out to eat. Yeah, I would be down for it. Yeah, I'm here. I'm here in San Diego until Friday, or actually until tomorrow, and then I'm gonna go up to Big Bear on Friday. Cool. All right, everybody. Thank you so much for your time. Yeah, casually brings up SMCI. Yeah, Norman, I'm only going to dinner if you're paying the check. Dude, there's actually a good amount of people in here from San Diego, so I've learned over the years. There's a couple that 1K is from, well, I guess I shouldn't say that, but I already started. So 1K is from here. Um and there's a couple of the members from here. So yeah, it'd be cool to link up with a couple of you folks that are out here in California. That'd be a good time. I'd be happy to do it, but um yeah, well, I'd be down to work something out. That'd be cool. All right. Well, thanks again, everybody. Appreciate you guys' time here. Let's go to the Outback and send the check to Amp, dude. All right, bro. Make the reservation and I'll pull up. All right, everybody. Thank you so much for being here. Hope you guys have a great rest of your night. As always, pleasure spending this time with you. If you guys have any comments, questions, feedback, suggestions for the future, you guys know where to find me. Send me a message. Let me know. I can't read your mind, so anything you're looking for me to improve on, please let me know. Happy to hear the feedback. And that said, that's going to wrap it up for the evening. Thanks so much, everybody. Have a great night. See ya.